We have some interesting opportunities and some very interesting areas to talk about. And our Nina Mishra is no exception as far as interesting is concerned. So, Nina, you're talking about the ETF, the Guggenheim spin-off ETF.
Yes.
Now, what's a spin-off ETF? I've never heard of that before.
Yeah, the ticker is CST. It holds companies that have been spun off recently from their parents. Now, most investors like the bigger, widely known ETFs, but some of these ETFs, which focus on very niche strategies, they have been doing very well, and I expect them to continue doing well in future also because of the investing strategies that they follow. This particular ETF holds spun-off companies which have been spun off from their parents in the last 30 months, but not earlier than 6 months. Now, research shows that whenever the companies are spun off, the spun-off entities perform better than their parents as well as the broader markets. Initially, they sell off because probably some institutional investors are required to offload them because of their investing guidelines. But later on, they perform very well, and they outperform by almost 22% in the first year itself. And the reason is many companies, when they believe that a business is better as an independent entity rather than a part of the business, then only they decide to spin off. This ETF has been delivering solid performance, 103% return in the last 3 years, 32% year to date, slightly expensive, 60 basis point expense ratio, but I expect it to perform well, so maybe worth a look.
Is this a new category of ETF?
No, it's been there for more than 3 years. But this is the only ETF which focuses on spun-off entities.
Interesting. All right, Todd, you got a home builder.
Yeah, not as cool as spin-offs, but MDC Holdings is the company. MDC is the ticker symbol. They've been building homes under the Richmond American Homes brand for over 40 years, primarily in the western U.S. states and the mountain states, some exposure on the eastern seaboard. But the home builder industry has been interesting. It obviously, housing market has been rebounding and people have been going back into housing. Home builders have been doing well, but the recent rise in interest rates has sent stock prices, especially of MDC, significantly lower as higher mortgage rates, higher borrowing costs keep some buyers on the sidelines. But I think it's too much of an overreaction. I think the sell-off is overdone. And if you take a look at the fundamentals, the industry rank of home builders is currently 8th out of 265 that Zacks ranks. Wow. MDC is a number 1 ranked strong buy within that. And they've been blowing it out of the water. Over the last 4 quarters, they've delivered a 74% average positive earnings surprise. Analysts have been significantly raising their estimates over the last several months. And if you take a look, they're trading at just 13 times forward earnings. And that's a discount to the industry median of 15 times. So yes, rising interest rates might slow down the housing recovery a little bit, but I think if rates kind of plateau here, and like we talked about in the last segment, if the Fed holds off on tapering QE, I think that will be the case. Interest rates might even start to pull back, and the overall housing market remains strong, then this would be an area to be in.
Okay, Tracy, you're going to round out the top 3 with a retailer.
Yes, Restoration Hardware, going on Todd's theme here about home builders and anything having to do with housing being really hot. This has been one of the hottest stocks, I think, in the last 2 months or so. They do the luxury type of furniture and all that stuff, but they've been expanding their brand. They're now spinning off a Restoration Hardware kitchen, which will have food items. They're going to do Restoration Hardware Antiquities, which is actual antiquities. Apparently that's a $35 billion market, so they're getting into that.
Wow.
They have a home and garden. I don't know if anyone else has gotten those huge set of catalogs that they send out. They're not cheap. They weigh 20 pounds or something. The post office must hate them. But those, it goes to this whole design concept that they have. They have a really charismatic co-CEO now, and he's their head of design, Gary Friedman, who's kind of like the Steve Jobs of Restoration Hardware, and he's all about the design aesthetic, and it's selling. Their first quarter same-store sales were huge, 41%. I've never seen a retailer with same-store sales even above 20%, let alone above 40. So obviously the rising stock market's helping. Their price point is at the high end. And, as the rich get richer, they want furniture. They're buying the houses again, things like that. So Restoration Hardware, Zacks number 1 rank, but it is trading at 46 times. Unlike Todd's, it's not cheap, but you get the growth, 46% earnings growth expected this year. It has pulled back a little bit. They just had a follow-on offering for, it was originally supposed to be 12 million shares, now it's 8 million. They priced it at $70 and the stock is trading just a little bit below that now. So could be a buying opportunity for those who are willing to get in and want the growth. But yeah, it's a good story for housing, and these retailers are really able to cash in.
Okay, thank you all for that. And the stock picks don't end here. You can get over to Zacks.com if you're not there already watching this video, and link to other stock picks and stock picking strategies right off the home page. They change frequently, so check back often. With everyone here, I'm Terry Ruffalo.